What
Go ahead.
riders matter most? I mean, paid up edition rider, I think a term rider is almost essential in a lot of these. So, like, paid up editions create cash value. Term rider can artificially bump up death benefit to potentially create more cash value. I don't know if there's any other special riders that you would want to factor in. And if you're talking to our team or someone that really knows what they're doing, all these things should be like a no brainer. A waiver of premium is an optional rider that you could look into. That's essentially that the insurance company will pay at least the base premium if something were to happen to you, like you were to get disabled. You would want to compare that to getting like a DI policy, and you could look at the pros and cons. Some people decide to get it, some people decide not to. So those are things that you could look at. But I don't know, Dom, if there's any other like riders that jump off the page for you that you're like, hey, you got to make sure that you get this.
No, I mean, there's like a gazillion riders, especially when you start talking about traditional life insurance and term insurance and other things like that. But I think for the basic premise of what we're discussing and talking about, I think what you shared and mentioned is plenty. I know some offer like a long-term care rider as well, which is very close to home for a lot of people. It's something to consider.
Yep.
But in general, if you're coming for higher cash value, the things that Caleb mentioned, I think is right on par.
Cool. Okay, last question is, should business owners use index universal life for this strategy? And it really comes down to you're using this as a foundational asset for your business. Would an index universal life policy make sense if you're a business owner and wanting to see if life insurance could enhance your business endeavors?
I would say the answer is no. And I don't normally give black and white answers, especially when it comes to IUL in a lot of instances, because I always say that it depends on the person. But we're going to pretend that this use case is a storage of liquidity to be able to borrow against for your business when needed. And when needed is very important. And in IUL, in majority of them, you had lack liquidity early on because there's surrender charges, there's fees, just the way that the commission structure is set up, and just the designs as a whole are meant for long-term performance and not early cash value usage. And so then you start to add other risks involved of like, well, the market might be down, so therefore I didn't get any policy growth. But guess what? We had a recession, so I need to pay my employees. Wow. So your policy didn't grow. I need to pay my employees. I don't have any money. Now I need to borrow and take a loan rate of 6, 7, 8% against my IUL, because a lot of the times the loan rates are a little bit higher. I am putting a lot of risk into one segmentation when life insurance is supposed to give you a buffer of volatility and make things give you more peace of mind when you need it the most. And so I would say that that's not a very good use case if this is what we're trying to accomplish.
All right, Dom, this next question I think is important, and it comes down to how should someone plan to hold their policy? Should their business hold it? Should they hold it personally? I know we advocate a lot of times that business owners should actually hold their life insurance policy personally and not have the business. Sometimes that can be confusing, but break down why we recommend in most cases people hold their policy personally, but they can still use their cash value for whatever they want, including their business.
Great question. I think that when people are looking at this concept, the ideation of putting it inside of an LLC or something like that sounds very attractive, because you think that because it's in an LLC brings lots of benefits, right? You have the protection, it prevents you from getting sued other places, etc. Well, life insurance as a whole already has a lot of natural benefits built into it, whether it's like creditor protection and lawsuit protection, and tax. Like there's already really solid benefits that come within life insurance. And so by naturally putting it and owned by the LLC doesn't give it any extra benefits from the protection, from the veil that's essentially saying your personal side to the benefit side of the business, et cetera. And so what you're doing is you're just creating more complexity for no reason at the end of the day. There's more questions, there's more validations, there's more upload, there's more, they'll ask more questions about the business in regards to P&Ls, revenue. Like there's other things that get involved within that could even limit the amount of coverage that you could get in theory, just depending on what the P&L looks like and other things like that.